performance the industry has witnessed for the country's second top foreign exchange earner. However, all is not lost, with Tourism Ministry pumping 2 billion shillings to aggressively market the ever-changing demands of today's tourist.
Kenya has suffered bad tourism revenue days is no news considering the tough phase the country has been through the past 2 years. But rather than bury heads in the dust, the government through the Tourism Ministry is awaking to the reality of new age tourism diversification. Today's tourist is tech-savvy, educated and very demanding, meaning to satisfy today's tourist, the narrative has got to change. The dynamism, innovation, agency to meet the need of the ever-rising middle class at home and abroad. Tourism Cabinet Secretary Najib Balala is driving the aggressive tourism marketing agenda with 2 billion shillings boost to the industry to increase the numbers, which could take Kenya 2 years to regain the close to 2 million tourist number last seen in 2011. To encourage tourists to choose Kenya as a destination, the beginning of 2016 saw the scrapping of visa fees for children and the rollout of rebate charter incentives to airlines with minimum passenger load of 80%. The revamp also includes an additional 30,000 bed capacity to the already existent 60,000. A worldwide country brand index by Future Brand places Kenya as the 65th most attractive country to visit in the world of the 118 countries whose perception brands were. While in Africa, Kenya comes third after South Africa and Egypt. This means that Kenya is yet to be branded better locally, regionally, around Africa and the rest of the world. Low international tourist numbers from traditional source markets have seen domestic tourism pay off for investors with a 3% increase from 43 to 47%, an indicator that more needs to be done to sell local tourism to Kenyans, where a growing market for adventure is. The docking of an 1,000-passenger-filled cruise ship in Mombasa at the beginning of 2016 is probably one of the signs that things could be looking up for the country's second foreign exchange earner in coming years. Joy Doreen Bira, KTN News.
After dominating headlines for the past few days following the announcement of plans to sell its 62.3% stake in the African market, Barclays Bank Kenya posted dismal profits in its trading results for the period ended December 2015. The bank, which is struggling to reposition itself in the highly competitive banking sector, managed to post 8.4 billion shillings in its after-tax profits, representing a marginal rise of 430 million shillings. The bank's managers stated the underwhelming performance is as a result of growth being impacted by volatility in the macroeconomic environment, resulting from fluctuating interest rates and a weakening shilling, which had an effect on the bank's trading book. The bank is looking to make a comeback through the upgrade of its ICT systems, which the CEO Jeremy Awori notes will leapfrog the bank into double-digit profit-making territory.
The committee adjusted in an exchange rate of 101 level. That's